Hello and welcome to Truth in Real Estate, where we help you understand the truth about residential real estate so you can make smart decisions about buying or selling your home and investing in real estate. This is Kevin Cahill.
And this is Lisa Cahill.
Today we're excited to share with you, we're going to do a little bit of debunking today. We're going to debunk some myths. The common myths that home sellers often have about what their home is worth in today's market.
So we're going to start out with myth number 1, which is it is worth what I paid, including improvements.
Well, we know that that's not necessarily the case. Many people have over-improved a property well above and beyond what the market will bear for that type of property. And what we would recommend is that you go back and listen to our podcast on the risk, the danger of over-improving a piece of real estate.
We really go into a lot of great detail on that one, so it's a good one.
You know, it's so common the case that a person will say, well, I paid $400,000 for the home, and then we redid the kitchen. That cost us $32,472. They have the receipts. And we also redid the bathrooms, and each bathroom cost about $11,419. And then we also epoxy coated the garage floor, and we put the blue light in the air conditioning system. And all of a sudden they say, you know, so we have about $460,000 in our home. We think it's worth $460,000. Well, depending on how long they've been there and what the appreciation rate has been in their local real estate market, it may be well worth that. It might be worth well more than that. However, we've seen so many people buy a home, do a quick renovation to it, and expect to flip it for some home run profit margin. And that's not necessarily the case. Each year, the National Association of Realtors does an annual survey of home buyers and home sellers, and they determine the cost and value of renovations. What's fascinating to me is that there are only 2 items in the entirety of this report that consistently gives home sellers more than 100% return on investment. That is, if they installed a brand new insulated garage door, and 2, if they've insulated the attic of their property. Every other single investment that they could possibly make in their property delivers less than 100% return on investment.
And we've seen that to be true in our own experience.
And we've done so many renovations over the years, and many times we make some money on it, but when you consider the cost and the time and the effort of our renovation and the risk that we had with that money outlaid, it might not have been the best thing to do in terms of a profit endeavor.
Right. It's more for us, it's a place for us to live.
And we enjoy doing it.
And then we know we can get our money back out of it and maybe make a little, so then we're basically not paying a lot to live because we always make money on when we sell.
And a lot of times we make the crux of that profit was simply us not having to pay a real estate agent fee.
Right.
And we are real estate agents, so we just sort of absorb that fee ourselves.
We get it when we buy and we get it when we sell.
So we take advantage of our position as real estate professionals. But overwhelmingly, a property may not necessarily be worth what you've paid with the factor of recent improvements as well.
In other words, that's not where you get your price. When you put it on the market, that's not what it's worth necessarily.
Myth number 2 is that a property has wonderful upgrades that no one else has, so clearly it's worth more than a neighbor that doesn't have such incredible, wonderful upgrades. You know, for example, if somebody puts in the Sub-Z refrigerator and they go with the super heavy duty, fancy dancy European style washer and dryers, and it's stacked and it's red and they paid extra for all that, there may not necessarily be any noticeable improvement in market valuation for those upgrades that no one else has.
Yes, and toward the end of this episode, we're going to explain how market value is determined and how the home appraisers actually work. But bear with us, we're going through the rest of the myths. So myth number 3, there are plenty of cash buyers, so the appraisal doesn't even matter.
Well, obviously the first thing to do in debunking the myth about cash buyers is every single cash buyer I have ever met wants a discount on the price for being a cash buyer.
And it's often more than they're ever going to get, but they
expect
it.
They won't get the discount that they're thinking that they are entitled to get. But when you factor in the uncertainty and the anxiety that financing and appraisal contributes to the stress to a home seller, yes, a home seller would always prefer to work with a cash buyer if possible, because they don't have to worry about the appraisal so much and they don't need to worry about the financing getting approved. It's a cash buyer. But then you flip that and say that the cash buyer wants a discount for it. You absolutely need to be appropriate to the market in terms of what you are offering in the marketplace. If you're a home seller, you're competing against every other possible property that all of your buyers could consider buying. Your home needs to be the best option. And the fact that a cash buyer is paying cash doesn't mean that they won't also want to have an appraisal.
They often do, because they don't want to overpay. Nobody wants to overpay.
So they will hire a professional who can give them an unbiased third-party opinion of value, and you absolutely are not going to do the best you can possibly do simply because you're hopeful that you'll get a cash buyer. Now, myth number 4 is this whole notion that the appraiser will come in and look very closely and notice that you have the extra heavy-duty nails, you went ahead and got the thicker shingles on the roof, you paid the painters to put on a 4th coat of paint, and that they're going to somehow determine all of these extras that you paid to get in your home, and that they're going to go ahead and give you full value for all those extras. That's just not the case.
They're not going to.
The appraiser is there to determine that the risk of the value of the property is not unreasonable for the bank to bear. That the property is going to sell in a distressed foreclosure type of sale at or about at the market value that this borrower is wanting to pay for the property. They're not necessarily going to say, well, you did such a wonderful job on this renovation of your home that I'm going to go ahead and determine that your property is even worth more. No, you've got a 4-bedroom, 3-bath with a swimming pool. We're looking at 4-bedroom, 3-bath homes with swimming pools, and your home is therefore worth about what every other one in similar condition is worth.
Well, since we're talking about home appraisals right now, maybe this is a good time to explain exactly how that is working, that your home is really worth what a ready, willing, and able buyer will pay you. That's what it's really worth.
And what's so interesting is that you might think, oh, homes are going way over asking price now, so people are willing to pay over asking price. Well, the important thing is you bear in mind that your home is really worth what a ready, willing, and able buyer will pay you. And if they are not able to pay you cash, then the bank has the final say.
That's right.
The bank is going to look at that appraiser and at that appraisal and determine that this buyer is about to overpay and we're not going to take the risk of backing that loan. So even though buyers are ready and willing to overpay for certain properties in this market, we are definitely dealing with lenders and appraisers who are a little concerned that the property might be overpriced, that the overall market is overheated, and they are going to throttle that energy that these buyers are coming forth with.
Definitely.
So you need to be mindful that when you put a property on the market, you need to, first off, convince your real estate agent to take the listing at that price. The real estate agent is going to determine, well, is it a likely opportunity for me to expend a bunch of energy taking this property and putting it on the market? Will it actually sell for somewhere reasonably close to what this seller is wanting to get from the property? And if you're able to convince your real estate agent, which shouldn't be too terribly difficult to do, then that real estate agent needs to then go out and convince other real estate agents that it's worth what it's being asked, the asking price. Then those real estate agents need to convince buyers that it's worth your asking price. Now, here's the interesting little catch. Oftentimes, those buyers need to then convince mom and dad or their kids, if they're older buyers, that we're not overpaying for this property, because you always have the peanut gallery.
There's a lot of hurdles to go through.
Then, once they've convinced their family and friends that, hey, I'm going to pay a certain amount for this property, you don't think that's a mistake, do you? Then they need to convince the home inspector that the property is worth buying, in essence, that it doesn't have any catastrophic issues that would be a real concern for you as a buyer. Then they need to convince the lender that it's worth it. The lender then is going to hire an appraiser. They don't really have, the buyer doesn't get to really interact with the appraiser, but the question is, will the appraiser buy into this pricing? And then at the end of the day, you've got all of those hurdles to leap over before you're actually able to get that money and put it into your bank account. Now, let's talk about myth number 5. Is it worth what some online portal says it's worth? I can't tell you how often we've dealt with home buyers who look at the appraised value on some, online estimate, and they're like, that's crazy, I'm not paying it. And then we've had the flip side of it, which is home sellers look at that appraisal and say, that's crazy, it's worth a whole lot more than that. So here's the real issue. And let's just finish up myth number 6. It's worth what an agent that is trying to get your listing says it is worth off the top of their head without doing any research. And that's really the crux of the matter. When we work with home sellers and they ask us to give them an opinion of value on their property, we do hours of research. We look up all of the possible homes that a buyer could conceivably consider buying today in addition to buying the subject property. We also look at all of the properties that have very recently gone under contract and are currently pending, because that gives us an indication of what buyers have said, yes, that price is priced well enough for us to go in and make them an offer, and the seller said that offer is perfectly acceptable to me. Now, it might be that those pendings are selling above asking price or below asking price. We'll know better once that property closes, and that's the third group of properties that we look at. We look at those properties that have recently sold that are similar. All of these give us indications of what the market is saying homes like this are worth. And so when a buyer comes to take a look at a property, they're doing the same research as well.
Of course.
Their real estate agent is saying, hey, here are all these other homes you could consider buying. Oh, By the way, you've seen all the other homes. You've actually walked around inside all the other homes, so you know what options you have. Here are the options you no longer have because they're currently pending. And here are the options that you missed by a few weeks because they're all closed. Here's the range of value that you should feel comfortable paying for this property.
And you know what else buyers do? They research how much you actually paid for the property. And they don't really believe that you put all the improvement costs that you actually did or didn't do. So they're looking at what you paid, and they are basing their decision on what you actually paid to buy it. They have no idea what you paid to improve it.
They don't
but their
know.
estimation is always less than
Right.
reality.
If you bought a home 5 years ago for $600,000 and now you're asking $1 million,
Oh, they don't like that.
a buyer's like, I can't believe that this guy's going to make $400,000 more off of this sale, and they may not want to proceed, or they may be fine with it depending on how nice the property is compared to the others that they've had to be able to even consider. So the interesting thing about it is that your home is worth what the market will give you today for your home in its current location, in its current condition. And the factors that come into play on that are, what other homes can I consider buying? What other homes have similar buyers bought? And what have those closed transactions indicated is a fair range of value for a property?
And that's exactly what the appraisers look at too. They look at within a certain distance what the closed price was of a similar property in size and condition.
What's interesting too is that if you're dealing, for example, in Florida where we do a lot of business, if you have a non-waterfront home, appraisers will never use a waterfront home to determine the value of a non-waterfront home. They will just never do it. So if you live across the street from a waterfront home, that property is not really much of a comp for your property if you do not also have waterfront. Lenders and appraisers will never allow a waterfront property value to be attributable to a non-waterfront property. They're just too diametrically different for them to even factor it in. Now, another thing that I want to mention as well is that the value of your home in today's market is really all you can determine. You can't really figure out, well, what's it going to be worth in a year from now? Or was it better for me should I hold on to this home and rent this home for a year or two and wait for the market to improve even more? That's an area we call gambling.
Nobody knows.
Nobody knows. Nobody can give you any type of indication as to what that might do for you. Our suggestion to you is that you contact REALean, visit our website, REALean.com. Let us or one of our agents come out and meet with you, look at your home in person. All those online portals have not been into your home, so they have no idea what your home is actually like, let alone what it's actually worth. Visit REALean.com. We'd be happy to meet with you. And then we will come out, or one of our agents will come out to your home and do the preliminary research with you at your home, and then do all of the subsequent hours of research that is required to give you an accurate assessment of what your home is worth in today's market.
And we have another episode coming up that talks about how to price a home and the importance of right pricing.
Well, we look forward to catching you on our next podcast. Thank you for being with us today. You've been listening to Truth in Real Estate with Kevin Cahill.
And Lisa Cahill.
Whether you're thinking of making a move, or if you're interested in real estate as an investment, or if you're a real estate professional looking to enhance your skill set, we're here to help you make the very best decisions possible regarding residential real estate. Visit us at REALean.com to learn more about our company and to access our resources.
Please be sure to subscribe to our podcast and share with your friends. Goodbye for now.